Good morning. Oops. Guess I clicked the wrong button. Hang on. Loading, loading, loading. It's just loading. Oh, there we go. We good to go? All right. Guess we're good to go. A little choppy on the open, but hey, we're good to go. Good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. It's really nice to meet you. Today we're going to do technical and fundamental analysis with the overriding goal of planning our trades. Ha 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 ha. You've heard that before. So we'll do technical analysis, we'll do fundamental analysis, and I'll answer your questions. We'll burn through Forex pairs, but we can also look at gold, oil, Bitcoin, silver is fine, Ethereum is fine. I don't know, whatever you want to cover, we can do that. So just ask, the squeaky wheel gets the grease. Yeah, that's how the world works. Participation. Yeah, so that's cool. So today should be very interesting, and there's lots of reasonable news on the calendar. Have you found yourself an ECN yet? Every day I tell you should get an ECN. Have you made that decision? Straight through processing. Straight, you're connected directly to the interbanking system. That's what a professional would want. The standard operating procedure for a retail Forex broker is to trade against you. Oh, that doesn't sound good. So if you like the idea, you'd rather be just directly connected to the interbanking system, then use an ECN like Trader's Way. I recommend Trader's Way. There's not many ECNs. There are several out there, but mine is Trader's Way. All right, so what do you want to do today? Technicals or fundamentals? Let me know. Yeah, this is where you type. What do you want to do today? Technicals or fundamentals? Or where do you want to start? We'll do both, but what do you want to do? What do you want to start with? Fundamentals? Okay. For that, we'll use quantbox.co. You can log into the Pro. Logging into the Google Cloud. Okay, yields are down dramatically over the last 3 days. That's great. Oil's trying to recover. Bitcoin up big time. Okay. A couple other things. You can see that we have risk on in the bond market. We have risk on in the options market. And, well, we're somewhat neutral to slightly risk on the longer term. Everything over here is bullish and expected by QuantBox to be bullish. Everything down here is bearish and expected to be bearish by QuantBox. So it looks like, yeah, stock markets are recovering. So you can, right? FTSE up, Dow up, NASDAQ up, DAX up, S&P 500 up, Russell and Nikkei down, and yields are down, and that's good. Looking at the calendar. Okay, another dumb prediction, $1.52. And that gives the Fed the ability to cut. You know what I'm talking about? If the Fed wants to cut, that's the kind of thing they're looking for. And that, you would assume, would lead to risk on. So for today, the markets are the markets aren't even open yet, but they're opening soon. And VIX is down slightly. Yen is down slightly. Yields are down. Dollar's flat. S&P 500's flat. And gold is up but just slightly. So what you want to do is look for these markets to move with congruency amongst each other. Correlation is what we call. You want to see VIX down, you want to see yen down, you want to see yields down, you want to see dollar down, you want to see S&P 500 up, and you want gold down. And if you get that, you'll have strong risk on. So on Friday, I'm going to cover a lot of the job stuff over at FX Street, but just so you know, we have good non-farm payrolls data. We have good weekly jobless claims data. We have good JOLTS data. We have good unemployment data. We have good wage growth data. QuantBox is getting unbelievably awesome. Unbelievable. Yeah, unbelievably good data. All right, let's switch over to the technicals. I'm going to take over the world. Oh, that's funny. I'm going to take over the world with TRADARS, by the way. Well, how about that? Maybe not take over the world, but why don't we get a very, very, very solid crew of traders that have good training, good coaching, a good feedback mechanism, good fundamental analysis, and good technical analysis, and money to trade. What if I could do all of that for you in one place? Well, that would be TRADARS. That's what's happening, by the way. Cool. Yeah. Yep. Oh, another thing I want to bring up before we do technicals here. I'm going to be in St. Louis in a couple of weeks. Is anybody out that way? Is anybody near St. Louis, Missouri? Would you like to get together for maybe dinner or a cigar and a cocktail? I have 2 days of meetings at the St. Louis Fed in a couple of weeks. And so I'll be there Monday and Tuesday. And what is it, the 17th and 18th? I'm going from memory. So that Monday night, we can meet up for a cigar and a cocktail. Let me know. Yeah, I don't know the security protocol. Like, my first thought was, hey, we could do a group photo at the Fed. But I imagine the security is pretty tight, so I don't know if I can get you into the building. But if you're making a drive and you're like, well, it's going to be a day for you, right? You're going to spend the night. Then I do know there's a museum at the St. Louis Fed that you might want to visit. Hotels seem to be ridiculously cheap. And so I don't know if your drive, if your flight, but the flight was cheap, the hotels were cheap, all that kind of stuff. So if you're in that area, sure, Truckee Mogul. Start with a high quality, light cigar. So imagine if someone was going to start drinking coffee. You'd get them a mild coffee, and you'd put a lot of cream in it, right? A cigar would be the same. And you don't want a cheap cigar to be your first cigar because they're not good. So go to your local establishment, if there's a cigar lounge somewhere near you, and ask for the Monte Cristo number 2. Okay. The second choice would be Davidoff. And to tell them what you're looking for, a beautifully constructed, high quality tobacco cigar that is mild. And that would be, again, Monte Cristo number 2, or almost any of the Davidoffs. Okay, there you go. Or grab your truck, meet me in St. Louis. All right, so typically you're going to use TRADARS to do your technical analysis. And I have it set on show me euro dollar only. Let me turn all that on. Let me turn all this on. Let me just turn everything back on. Okay, cool. What we want to look at here is we have some news coming out. Oh, that's why Denise is on it. She's like, tell me about the kitty cat. Okay. First of all, let's dive into this. First of all, if they raise or cut, there's no pattern. Oh, Richard, I said that in about 2 weeks, I have two days of meetings at the St. Louis Fed. I'm only spending one night. I'm going to fly in, spend the night, do the second days of meeting, and fly home. So hit them hard and hit them quick. But I thought that evening we could do a meetup if you guys are anywhere around there. I found a very, very nice, classy cigar bar. So I definitely want to go there. I'm staying at a beautiful old hotel right next to the St. Louis Fed. And I got like a corner room, extra large suite at a very nice hotel. It was $250. Like, that is so cheap. You could rent the penthouse for $400 a night. Like, I'm like, what? Oh my God. But you have to understand, when the St. Louis Fed was created, let's say 100-something years ago, the main economy of the United States was agrarian. It was farming. So a place like St. Louis on the Mississippi River, obviously you put the barges and fill them with wheat and grain, right? So farming, the agrarian society or economy was huge. And in fact, you have the Kansas City Fed and you have the St. Louis Fed. They're very, very close to each other. But notice that this was necessary to create the Fed because the farmers were very powerful and they didn't trust the New Yorkers, and they certainly didn't trust those in Washington, D.C. So when the Fed was created by J.P. Morgan, to negotiate to get the deal done, they had to have two Feds controlled by the farmers. Okay? So you can imagine how rich and powerful St. Louis would have been, hey? And so St. Louis must have just been crazy wealthy. And so looking at it now, well, the world has changed a little bit. And so I don't know what it's going to be like. It doesn't look like it's the center of the universe anymore. But there's this beautiful old hotel, and it's cheap. I mean, a penthouse for $400 or $500. I can't remember what it was. It wasn't like look, you could just go to like Amelia Island, Georgia. I go there all the time. They have a Ritz-Carlton. Great, they have a Ritz-Carlton. It's damn near $2,000 a night for a cheap room. So to go to like the penthouse at this hotel in St. Louis, it's $500. You're like, $500? But I'm like, I don't need a penthouse. I don't need the presidential suite. Like, no, I don't need one. I just need a nice room. So, so I spent the whopping $250 to get a giant suite. Like, it's so stupid. So anyways, if you need a cheap vacation, St. Louis, man. They have jazz. They have barbecue. They have the Mississippi. You can go for a swim in the Mississippi. Oh, my God. Right? Anyway, so I'm going to be there. If you want to meet up, let's do it. Let me know. All right. So anyways, going back to this, look, if they don't do anything, there's probably a reliable pattern. What this is also saying is if they do cut or if they do raise, there is not a reliable pattern, which is actually kind of strange. I wouldn't have guessed that. But it is what it is. We're not guessing anymore, right? What's up, MM? Martina Mikhailovich? Oh, namaste. Namaste, thank you. Okay, so there is a scalp possible on Aussie dollar. There is a scalp possible on euro dollar. There is a scalp possible on pound dollar. There is a scalp possible on Kiwi dollar. And there is a scalp possible on USD CAD. Somewhere between 72.7% and 80, so basically 72 to 82% chance of accuracy. Oh, well, let's focus on Kitty CAD. And we're looking at up. Now, show me how we got there. Okay, so here's how, okay. On the 10th of April, up was the initial response and a high close. January 24th, up, high close. December 6th, okay, it actually came down. It was up the candle before, but then the news came out, down, but a high close. September 6th, up with a high close. July 12th, down for about an hour with a higher close. March 8th, up with a high close. January 25th, up with a high close. And then going back to December 7th, 2022, I'm sure you remember the day. It dropped for an hour and then high close. So you have two scenarios, right? The pop, but after the pop, there's not much left. It's almost like a pop and drop or a pop and stop. I'm going to call it a pop and stop. Trucking Mogul says, isn't the Canadian economy grinded to a halt? In many ways, yes. So if they cut, that would help. But the thing is, based on our analytical analysis of what happens, there's no reliable pattern. If the Bank of Canada cuts today. Now, I would assume we'll get some vol, but there's not much pattern to it. So it's a cautionary tale. So we have what we have. So if they don't do anything, 72.7% chance it'll be up. And then of that, we see two scenarios. It'll be up immediately, and you're going to have to trade it quick. Within the first 5 to 15 minutes, you need to be, in fact, we're looking at this. In the first 15 minutes, you need to be long this asset, is one scenario. The second scenario is it falls for an hour and then you buy it. If they cut, we need to just trade the price action, but it's not reliable as far as a pattern. So you can do it, but you're kind of on your own out in the ice flows. You understand this detail that we have? It's a level of detail which is quite good. Okay? So there's two scenarios here, guys. Let me try to draw it. Let's go to a 5-minute chart here. Okay? There's a scenario that it might do something like this. Up, down, buy it. And you take profit maybe in an hour, hour and a half. The second one is let's pick on it this way. Okay, instead of that, it comes like this. Buy it. Okay? And in an hour and a half, you take profit. The first one's a vol trade. The second one is a fade trade. If they cut, it's price action. If they raise, it's price action. But there's no reliable pattern in the past. So you just treat it differently. Everybody say aye if you understand. Everybody say aye. Come on, say aye. Aye! Come on, say it. What, do you have shy fingers? They don't like to type in front of other people? Okay. So we have crazy levels of detail now. Just insane levels of detail. Now, very quickly, we could flip around. I still have a couple of moments. Where's my QB? Where'd my QB go? Did I log out of my QB? Maybe I did. Traders QB. Hopefully I have some time left. Let's see my QB. Let's bring up the QB. The Q box. So one of the cool things about QuantBox is we talk directly with the central banks, and they talk back to us. So I have a central banking tool, and we'll see if things change. This doesn't predict anything. It tells you what the Bank of Canada has told us. So when you listen to talking heads on TV, very often they debate about what's going to happen. Bank of Canada has already told us. So in the third quarter, they're going to cut. Is it the third quarter yet? Well, that's quite a conundrum, huh? What a conundrum. What a predicament. The market expects them to cut, I'm pretty sure. Okay, so let's go here. And maybe they will. Remember, it's not a prediction. So we're at 5, and they are expected to cut. Okay, who expects? The market expects. Okay, that's interesting. Okay, great. But that's not what the Bank of Canada has told us. Now, maybe things have changed. That is true. Again, this is not analytic, right? This is not analytical. It's not predictive. This is what the Bank of Canada has told us. This is their inflation expectation. This is where they think interest rates will be. Okay. And now we wait. So if they cut, then this will get updated, and we'll pay attention to their forecasting and their outlooks. Okay, so we'll take care of that. Richard says, so if they cut now, then they're even more dovish. No, it is dovish. So it has to do with where they expected inflation to be. Okay, they expected inflation to be at 3.14 on average. So they're about 3.5 to 3.25. So then you analyze it. Well, where is Canada right now? So like we could take a look at USD Kitty Cat. And Canada's at 2.7. They thought they would be at 3.4, so they could cut. You see how awesome QuantBox is to be able to pull up that data that fast? $2.7 versus 2.5. Inflation. 0 score. All because of this. Isn't this beautiful to just have this wonderful detail? Problem is institutions, 77% of institutions are short the Canadian dollar. Beautiful to have this information, huh? What about compared to Europe? About the same. Same. Look at Europe and Canada. GDP is about the same. Inflation's about the same. Unemployment is about the same. Interest rates are not far off and may soon become about the same. And retail is heavily the wrong way. Wrong way or another. Yeah, so anyways. So what a lovely world we live in to have such amazing tools. There's no excuse to be an amateur anymore. That just means you either don't know or you're not doing it right. That's all it means anymore. There was a time where there's no way you would have this level of detail as a retail trader. Just no. You just would have no access to that kind of data. Now there's no excuse not to. You're choosing to fail. So one thing we could do here is, so we're thinking what this says, Canadian dollar weakness. Okay. Over 2 hours, 4 hours, and 12 hours. So if you catch a scalp, you might be able to hang on to it for a day. Well, that's interesting. So we're interested in maybe up. So you go to Forex and you go to settings and you go Aussie CAD, yeah, maybe. Euro CAD, maybe. I just showed you that's 50-50, but it's a maybe. What else do we have with the kitty cat on it? USD CAD. Oh, no CAD yen, huh? I'll have to remedy that. Cool. So anyways, we say show us some CAD. And we are thinking when the news comes out, we're more interested in selling CAD, which means USD CAD up. And that ain't happening here, but that's already 3 days ago. Here's one 3 hours ago, but that's buy CAD, not sell CAD. So that's not really it. A Euro CAD could be interesting because we already have an up channel in play. Okay, and that came out 7 minutes ago. You should be on it, bro. Did you not see it? What's wrong with you? Are you not watching 7,500 charts in real time? You missed it. Where were you 7 minutes ago? What were you doing? Well, come on, like seriously. You're like, what? And you did your research. And you're like, oh my God, well, there's a 77% chance of up. And we already got an up. Okay? So anyways, right? So you might wanna look at the euro. So you got to set this up. Hot to go, HOTTOGO. Where's my Euro kitty cat? Euro Aussie, Euro kitty cat. Shalaka-laka. Look at this. I even have it labeled. Quant box, bullish, 5. I have a target. We just hit the target today and yesterday. Look at that. Up. Boom. Kicked it off the 21. Easy peasy lemon squeezy. Once again, if you don't subscribe to things like TRADARS and QuantBox, you're choosing to trade blind and randomly? Well, that's your choice. I don't understand why you would decide that. Is that even a decision? But look at this, quant box, boom, boom. Luffle tout le monde. So now we got to go to a smaller time frame and await the news in a few minutes. And, well, we know there's a drop as a potential, and we're going to buy a drop. But if they cut, remember, all you have is price action. The other one is the high vol, where it'll probably go up to here, drop for 1 or 2 minutes, and then that'll be your chance. So remember, we have a low V. We have the low V trade, and I'm just going to guess like this. It's probably even lower than that, probably a little bit lower than that. And the other one is much more dramatic. The steepness is going to be much different. So there's like the maybe, right? Okay. So we're 4 minutes and 45 seconds away. Cool, right? So you got to draw all this down because it takes a couple of minutes to get this into the data and then pull up all the data and all that kind of stuff, right? Now, Peter says no trade is also a trade. Absolutely. And I started with that. So the market expects the Fed to cut. If you look at QuantBox and do the economic research, you could say, well, they could cut if they wanted to, right? But then you go back to TRADARS, and TRADARS says, when you click on this, there's no analysis for if the Canadian Bank of Canada raises interest rates, or there's no analysis if the Bank of Canada cuts interest rates. And we think they'll cut, or the market thinks they'll cut. So why isn't there any data there? It's because it did look at all the data. And it shows that there's no pattern in the volatility created if the Bank of Canada cuts today. So Peter could say, you could just walk away right off the bat. Yes. Now, I would assume some Canadian dollar weakness, but that's not why I'm here to tell you what I would assume. We just know there's no reliable pattern. So maybe this saves the Canadian economy and everyone wants to pile into the Canadian dollar today. That's also very possible. So we'll have to watch for that scenario. And the no trade might be the first trade, right, Peter? But then the second one would be, let's say the Canadian dollar gets ripper strong because they do cut. Let's say that's the scenario. Then we'll see it on the first move, and then we'll follow up with price action on the second move, but just realize that there's additional risk because you're trading price action with volatility but no pattern. So it's happening, just not in a reliable way. So there could be a no trade and then a follow-up price action trade or no trade at all. So we have incredible levels of detail. So this is all set up if there's no cut. So let's make sure we know what's going on. This is a scenario. If no cut. Okay. So now I'm going to go over to the calendar because it's faster in getting the detail. Because this isn't thinking, is it? It's not thinking, it doesn't have to analyze, it just pulls the data. Where Sonars has to think about it. And it takes a little longer. Usually takes 3 minutes, let's say. Everybody having a good time? Is this good? Make sure you click the thumbs up button. Tell me it's good. Decision is imminent. Imminent. Scroll it, scroll it, scroll it. We're spinning. Whoa, 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 I'm spinning. How quick the sun can drop away. I know someday you'll have a beautiful life. I know you'll be the sun in somebody else's sky. But why? Why can it be mine? All right, come on, we're spinning. Oh, shalaka-laka. Maybe even this calendar's slow, huh? Yeah. So they cut. Okay. So what do you think? Is it this one? All right. You got to be careful. You got to be fast. Got your finger. Oh, look at it. Hit the pivot and stopped. Oh, my God. Look at that. That's redonkulous. All right. You know what to do. You know what to do. Are you doing it? Are you going to do it? Okay, you got a 382 pullback. The next possibility is a 618 pullback. That's all there is. Are you going to do it? Cool. Let's watch this for a while. Let's get some royalty-free music going. Yeah! How exciting, huh? You gonna buy the dip? There's a second chance on the 382. Huh? It's a scalp, bro. Huh? What do you think? I talk about this in my book. This is the line in the sand, remember? This is the bayonet trade. The second one is the sniper trade. Remember, sniper trade. Oh, yeah. So there's your pop and stop. Did anyone grab the 3EA2? Wait, everyone's gone silent? Everyone's trading, I guess? I'd like to point out how amazing pivot points are. Look at the top. 149.25, bullish profit zone, aggressive. We knew that information yesterday. We knew that information yesterday. The playlist, hang on. The top of this range is a pivot. The bottom of this range is a pivot. $49.97. Wait, that's not right. $49.20. Okay, you bought it in the middle of the range. So that's not the most ideal spot. No, but I have an order down here at the 618. No, I have 2 euro-dollar trades right now from yesterday. But see what I'm doing, guys? It's called a trap and break. So once you've identified support, like Bruce, it'd be better if you would have caught sort of here or here. I want to see support. In the middle of the range is not support. I don't think you have a moving average on any time frame as well. So look, I think you can get that a little tighter. See, Frank, I don't like that at all, Frank. I understand your logic. Well, no, Bruce, you can see your chart. Yeah, so, Frank, I don't like that. I mean, I understand your logic, but technically this is a bullish market. And we had a bullish move. Maybe it was an overreaction. Okay, I get that too. But I would never train you to do what you did. It's a high risk trade. So I get it, but I wouldn't want that to be a regular part of your trading career. My humble opinion, it's just too risky. I'm a trend trader. Oh, I just missed it by an inch. Did you see that? I missed it by a pip. Oh, I missed it by a pip. Oh, no. Look at that. I missed it by a pip. Oh, no. Son of a gun. Oh, look at that. Oh, look how low it got. And the spread just didn't dip below. Oh, no. No. Yeah, too bad. It's all rigged. Yeah. Ah, too bad, huh? I just had 2 shakes of a lamb's tail. Of a kitten's. 2 shakes of a kitten's whiskers away from that. Yeah. More news. More news at 11. The thing is, it's not good news. So Sonar says, whatever. Oh, it's so terrible to look at, huh? Oh, that was so crazy close. All right. We'll look at the PMIs now. 54.8. Awesome. 54.5. Awesome. 53.8. Awesome. Employment down. That's good. If you want the Fed to cut. Okay. Orders. 54s. Awesome. Prices. Ooh. Ugh. All right. Inflation is still around. Look at business activity. 61 is unbelievably good. Holy smokes. That's nuts. So quite an ISM on that. Holy smokes, huh? And I gave back some is interesting. That's an interesting reaction. And it was on that dip, huh? Wow, quite a thing. Quite a thing. And so we could look at some of these if you want. Of course you want. Let's talk about this. How good is this number? Okay. A measure of the service economy in the United States. Okay. Take a look at this for a second. This services PMI. It's got a high degree of importance. We blew the doors off the number, so we were in contraction, aka recession. And then huge number, 54 is a good number. Okay, we're 27 days away from the next release. Okay. Boom, 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 boom. This is weird. Why is this? I guess it's just reported strangely. 60, I guess that's 60.000. So 54 is pretty good. So we have to pull out the old handy dandy notebook. Okay, and 54 is about here, huh? So it's a pretty good number. Above that, Favor says, what is the logic behind the scalping? What's scalping? Okay, so you can see if we climb any higher, we are in like very positive territory relative to history, right? So it puts this number in context. We were expecting 49, or let's say last month we were at 49. And 49 is recession. Let's see, 49 is about there, right? So to be significantly above that is quite a deal, huh? Big difference. Big, big, big difference. We can go back to our calendar. What else can we see here? I mean, this is ridiculous. Big number, huge number. So again, let's do the same sort of analysis. I'll delete this out. And we're here. It's, oops. Delete, that's my mouse. Okay, let's try it again, 62. Okay, that's quite a big number, isn't it? Well, it's the interpretation. So what we care about is wages. So business activity is hot. The Fed doesn't need to cut. Prices are high, so inflation is high. They don't need to cut. New orders are good. Employment is coming down. This says that maybe in the future wages come down, and if wages come down, inflation comes down. So like the one thing that the Fed cares about the most gave us, that's a negative number, by the way. So that says, oh, the employment part of the industry is cooling. Okay, so let's compare this. Okay, a 47. What does a 47 look like? Oh, come on, mouse. 47 looks like sort of about here. Okay. And maybe if you're trying to analyze as a trend. Okay, the trend is in the right direction. If there's falling employment in the service sector, then there's less demand for high wages. So if wage growth slows, there's less inflationary pressures, and therefore the Fed could cut if they wanted to. Is that helpful, trucking mogul? Okay, now we're about 20 minutes away from oil jumping. Oil inventories. Crude oil stock. Okay. Okay. And the one thing that you might want to do is break this down into digestible pieces like I just did. Okay. And you identify, let's say, the low of the range without looking at outliers. So that's pretty much the low of the range. What about the high of the range without looking at outliers? And I'm doing this fairly subjectively. That might be a little too high. Maybe it's more like this. Okay, so you want to, how low is too low? Because what we're trying to do is find basically a standard deviation, right? Look at all this data we have. You're welcome, by the way. Isn't this nice? So this can impact oil. Falling inventories can push prices up. Rising inventories can push prices down. Oh man, I missed it. It's so terrible. I missed it by a pip. No. Ah, man. Son of a gun. So now we got to move, and we'll move over to commodities. Boop, 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 boop. Okay, and are you trading this on a smaller time frame? La 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 la. And I'm going to flip this around to that. Thank you for the compliment, Trucking Mogul. I'm trying to teach a machine to think the same way. So I'm working on something new. Well, I'm working on many things new. One of the things I'm working on now is having reports reviewed. So this is PCE that came out a few days ago, June 3rd. And so it read the PCE report, and it said it's neutral. Summary of PCE, April. The Bureau of Economic Analysis provides insight into the current economic situation, focusing on personal income, spending, and inflation. This summary breaks down the key points and their implications for monetary policy in simple terms. See, I actually taught it to do that. Key messages. Personal income increases. Personal income rose by 0.3% in April. This increase was primarily due to higher compensation. Okay, the stock market went up. And government social benefits. So anyway, so it goes through this. Personal income went up, disposable income went up, consumption went up, inflation went up, personal savings. Okay? And then, here's the thing, Trucking Mogul. I have it then explain what it means for monetary policy if personal income increases. So we know up here, personal income increased. How does this impact monetary policy? Personal income increase. A steady increase in personal income can signal economic growth, potentially leading to a neutral or slightly hawkish monetary policy to avoid overheating. No cut. Disposable income. Increased disposable income suggests higher consumer spending potential, which can boost economic growth. This might prompt the Federal Reserve to maintain or cautiously increase interest rates. No cut. PCE growth. An increase in spending, especially in services, which we know was in that report, indicates robust economic activity. This could support a neutral or hawkish stance to control potential inflationary pressures. No cut. Inflation. PCE price index rising, which was in the report, within expectations suggests controlled inflation. If this trend continues, it supports a stable or moderately hawkish policy to ensure inflation stays within target range. No cut. Personal savings. A moderate savings rate, moderate. So Americans are not saving very much anymore. They don't have much money in the bank. A moderate savings rate reflects balanced consumer confidence. If savings rates were to decline significantly, so it's suggesting that the moderate means it was probably better before. Now it's moderate. It's okay. It's not as good as before. So if the savings rate were to decline, it might indicate higher consumption and potential inflation influencing a more hawkish stance. No cut. And then I say, double check yourself. What would make it a higher score? What would make it a lower score? Oh, it's pretty good. Don't you think? How many people think that this would be useful information if I had this for every economic report? The simple version. Because then you could just look at it and go, moderate. It's a 3 out of 5. Huh, all right. 3 doesn't mean cut, does it? No. So 2 people said yes. Really? Everyone else says it's stupid and I should stop developing the technology? Okay. We'll stop. You're like, Wayne, I don't even read the reports. Yeah. Okay, we are, what time is it? I don't even know what time it is. How close are we to the oil inventory report? Yeah. I don't even know where it went. Guess I have to pull it back up here. $10.22. Thank you. See, you know, I'm going to make 100 of you guys successful. Simple goal. Specific, measurable, attainable, realistic, and timely. So I'd like to do it in the next 3 years, 1,000 days. In 1,000 days, I'm going to put 100 of you into a trading and investing career. If you have a job, there's a reasonable probability that you will quit your job. Hang on, I'm buying Jerry Seinfeld tickets. Oh, what's the code? Now I gotta pull up the code. Anyone want to guess what Jerry Seinfeld tickets are going to cost? Well, the best seats are already taken. I can give you a sense. The service fee for buying the ticket is $50, $52. The service fee. Wait, what? The service fee for what? You don't even print the ticket anymore. They don't even use paper. What's the service fee for? Dude, $50 a head just to buy the ticket, plus the ticket price. It's kind of interesting. Let's see. So that's good. Orchestra Center, huh? All right, let's get Orchestra Center. I like me up front. And see, there's probably can't get. You don't want to be too close, right? Do you like parking? Yeah, I want parking. No, I don't want parking. Well, I guess my limo driver. Okay, get some parking. Nice. What time is it? 25. We got about 4 minutes left. Let me make sure we're looking at the right stuff. EIA! Notice we kicked off my little purple line. Remember, if you bull, you buy on the roll reversal. If we can break here, then you buy the next dip. Let's see. Now you guys are quiet. Did the music lull you? You're lulled, huh? Lulling and lollygagging? Those are things I do not tolerate. Well, let me tell you about lollygagging. Here we go. Sure, just as this is coming out. All right, hang on, I gotta pay for this. Here we go. I couldn't find an email under that, really? Spinning, oh, whoa, whoa, I'm spinning. My password is too long. I've never got that one before. All right. So let's take a look. A build. It's a build, everybody. Oops. Gonna go up here. A build, huh? It's a pop. Supply increase after a big decrease. Now they thought there'd be a drawdown, but no, there was a build. There we are, a build. Not outrageous, but that's what it was. They're expecting a drawdown again next week. How funny. I've never received that my password was too strong. I never received that before. How funny. Boom, 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 boom. So it's not, right? It's not amazing, right? Not an amazing number when you look at the averages. Say, we have the report. We saw it. It's a build-up. But not an amazing build-up, a pretty average build-up, but we were expecting a drawdown, and that's the difference, right? Oh, these idiots want to sell me insurance. And of course, their process failed to buy the ticket. Amazing. Just amazing. What happened to it? Just in the middle of buying it, it failed. Just amazing. Have to do the whole thing over again. Well, I guess I'll let you go. That was sort of a dud. Now, usually a build-up in supply would lead to lower oil prices. So, kind of a dud. So that was good. Hour and a half. That was a reasonable day, right? Remember, please join summer school. We're starting that very soon. Let me get the URL for you. Okay. Oh. And it keeps seeing me as an administrator. I got to clear that somehow. So you need this because it's very hands-on. It's more of a clinic. Okay? Summer school this year is more of a clinic. This is good for you. You should join. Peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day. At investorbootcamp.com in the swing trading room, today is the stop, look, and correct session. Also very, very hands-on, very, very interactive, very, very informative. You need to be there. Join the swing trading group at Investor Bootcamp. This will make a difference, I promise you. That'll be today at 4 p.m. Hey, have a good one. Cheers.